Today we're speaking with Robert Ioane, one of the co-authors of the second annual CEIBS Foreign Executives in China survey. He will be focusing on the survey's findings based on responses of market leaders. What are their secrets to success? What do they expect of China over the next few years? These are some of the questions answered in the survey. Robert, thanks so much for speaking with me today.
Thank you for the invitation, Charmaine.
So first, why did you decide to focus on market leaders for this podcast?
Thanks to our respondents' involvement and feedback to our survey, we had access to a large database with answers to more than 100 questions. All these questions were related to doing business in China from the perspective of foreign executives. It was a very interesting stage for us to analyze these responses from different views. After comparing service with manufacturing companies, we compared small and medium enterprises with large organizations. And after we finished looking at data for the countries that provided us with enough respondents, we realized that the database could be mined in many other ways. Another way in which we thought of mining this database was to select the answers provided by only those companies that indicated they are market leaders in China, to get an insight of what they do and how they manage to be so successful in such a difficult market. We were also very interested in their forecast for the next years, and we are convinced that such data can be very good in providing food for thought for managers.
Who exactly were the survey participants who replied to the more than 100 questions that you and your team compiled?
I'll give you a few numbers. 45% of the successful service companies are in the consulting industry. As the import of knowledge and expertise, training and increasing the performance of companies and employees, this industry is of great interest in China. 47 of the successful manufacturing companies are in manufacturing of machinery and equipment, which partly reflects that the worldwide demand exports, but also the double-digit yearly increase in demand for such products on the Chinese market. Then 61% of the market leaders in China are wholly foreign-owned enterprises, as the other company forms are providing benefits but also big challenges and disadvantages. An example is a joint venture which provides the benefits of having quick access to the market knowledge and quick access to local relationships, but also it has challenges in different management styles, conflict of interest, and power struggles. Wholly foreign-owned enterprise form is the clearest form, and it provides complete control and decision power. 61% of the market leaders in China are subsidiaries or branches. They represent global organizations which may tell that having success in China requires financial strength, good strategy and management that may be easier provided by a global organization. However, not all successful organizations in China are large or global, which shows that good ideas may also work and bring success to a company of no matter what size. 33% of market leaders have less than 50 employees in China, which shows that success is a matter of efficiency and not just numbers. The market leader companies in China have various sizes, but it seems that the size of the Chinese operations is a relatively unimportant factor of success. However, most companies are representing global organizations, and some are very large worldwide. Also, 92% of China's market leaders have more than 250 employees worldwide, which shows that global organizations have the first chance of being successful in China. The business and management worldwide expertise may be part of the reason why these companies are the most successful companies in China. Another reason may be the fact that global organizations were first to arrive in China. Probably they had the financial strength at that time to start China operations and may benefit from first mover advantages.
Okay, so you have told us who exactly you surveyed and you gave us a few other details. What were your top 10 findings? Information that can give us some insight on what you learned from these market leaders who are among the foreign executives doing business in China.
Okay, after analyzing the data for market leaders, let me give you an overview of these market leader companies in China. So consulting services and the manufacturing of machinery and equipment, these are the most successful industries represented in our survey. The most successful companies in China are also globally successful. They represent large organizations, subsidiaries, or branches. More than 50% of the market leaders, they indicate an increase of their investment in China by at least 10% in 2010, for 2011. Competition is tougher in China than in other countries in the opinion of market leaders. The market leaders are very confident in 2011. There's an index of 8.24 out of 10, which is much higher than the overall average of the survey. For the next 5 years, the confidence remains high, but it drops below the average of the other respondents, which may show maturity or realistic expectations, since many of the other organizations represented in our survey are small and medium enterprises, maybe those being more enthusiastic and less realistic or experienced in running long-term operations. Market leaders expect more than 30% increase in their labor force in 2011, and they also expect an increase of their sales in China by more than 45% in 2011. They expect an increase of their sales worldwide by more than 25%, which is interesting. The average marketing budget for market leaders in China is only 2.27% of their yearly revenues, and they use the same marketing strategies across China with only minor changes. This may be something temporary, maybe because of the worldwide crisis. Maybe they've reduced some costs, which makes sense. However, reducing some costs too much can lead to shrinking. Reduction of costs should be done by pushing towards efficiency and not by halving the number of employees or cutting marketing budgets. To move forward, the clients of our market leaders are mostly private and state-owned Chinese companies, which is a business-to-business type of activity, and they are these organizations are targeting mostly the premium and the high-end and the middle consumer segments. They don't focus on the lower end of the market.
So now let's get into some of those points in greater detail. For example, just how successful are these market leaders?
Okay. 76% of these companies, they have annual revenues bigger than $10 million in China for 2010. And this reflects the fact that these companies are powerful. And these are quite large operations, which is part of the reason why they are market leaders. They are difficult to fight with in their industries, and they have the financial strength to become and remain market leaders. 64% of the market leaders from China have more than $500 million in annual revenues worldwide, and they are very attached to their market leader position. The market leaders from China are without doubt market leaders in other markets, and this global experience and financial strength is helping them in keeping competitive advantages over competitors in their industries. Most global companies are balancing the advantage of local companies, which are better relationships with authorities, more guanxi and networking, better knowledge of the local market. They are balancing these advantages with more funds, international experience, better strategy, management, or technology. 75% of them have increased their investments in China during the last year by 1 to 9%, while 25% of market leaders, they indicate an increase of their investment in China by more than 10% in 2010. The Chinese markets require that the investment keep the pace of the rhythm of growth of the industry and the pace of growth of the competitors, and therefore heavy investments are expected in many industries. In addition, the competing companies must be focused and treat the Chinese markets with respect and focus, as major changes are happening in short periods of time and lack of attention could reflect on loss of business. The tough competition is balancing the existence of so many potential customers, opportunities, and market niches. 84% of market leaders in China intend to increase the amount invested in China in 2011, 67% indicating an increase of more than 5% of their investments. 50% of these organizations intending to increase their investments by more than 10%.
You said almost 80% of these market leaders had more than $10 million in revenue in China last year. But are they just benefiting from China's impressive economic progress and growth? Do they have it easier here in China? And do they anticipate that they will be also successful in the next few years?
Okay, this is an interesting question. 68% of the market leaders believe the competition in China is tougher or much tougher than in their home country. The many years of experience in global operations represented by market leaders indicate that China is not only overcrowded by potential customers, but also by skilled competitors. So full attention, financial support, and an aggressive approach to sales, networking, all these are required to survive and be successful in China. Good quality and low prices are equally important for the demanding Chinese consumers. They are very powerful to the wide variety of choices. Interestingly, customer services are ignored by many organizations because of the local culture. A complaining customer would make someone else lose face, and that therefore the Chinese customers don't usually complain. Companies cannot rely on such important feedback. Instead, the local customers use the time before acquisition to bargain and get the best deal. The relationship with the sales company ends after the sale is complete in many cases, unless a special relationship exists. These consumer behavior differences from other markets are challenging companies to deliver very good quality at a very good price, to increase repeat purchases without delivering customer service value. Also consider that the number of small enterprises that only compete on price, and they are very good at replicating business models, products or services, and they are able to deliver sufficient quality at a very low price. So the biggest market comes with the biggest challenges. And yet these market leaders are very confident in the next year. They have a confidence index of 8.24 out of 10, where 10 would be extremely confident, and they are more than averagely confident 7.83 out of 10 in the next 5 years.
So now we have established that these are successful enterprises and that they're able to succeed despite the challenges of a tough China market. What makes them so successful? What are the lessons that could be learned for any company looking to do well in China? And why do you think that they were able to become market leaders?
Good strategy, the quality of management team, and the company image and reputation were the top most important organizational strengths for the market leaders in China. The most important success factors for these companies were the competitiveness of the product or service, the price-quality ratio, the brand strength, positioning and awareness, and the marketing and sales strength. Even though there are so many choices available in any industry, consumers appear to be content with relatively few choices they know and trust. Therefore, brands owned by large corporations, they tend to gain more and more market share, and therefore brand strength is very important. The other three most important strengths were, in the market leader's opinion, flexibility and adapting to local ways of doing business, good networking, well-known guanxi, and the knowledge and understanding of the relevant local laws and regulations. As reasons why they are market leaders in China, these companies indicate their competitive advantage, unique products and services, technology, production process know-how, and so on, the price-quality ratio, and their market understanding as being responsible for their success in China.
And what do these market leaders have to say about the challenges they face when doing business in the China market? What are the things that they think companies that are eyeing this lucrative market should know before wading in the deep end?
The top concerns for the market leader companies were, in order, finding and retaining human resources, the increasing cost levels, the increasing strength of the Chinese competitors, and the inconsistent laws and regulations. The labor pool stagnation is a new problem in China. The labor pool stopped growing since 2007. This was caused by the growth of the economy and also by the increasing age of the population. China's one-kid policy. Companies are improving their employee retention policies, and they became aware of the inevitable increase in salaries.
What do they have to say about issues such as the labor force, rising wages, HR costs in general, and staff turnover?
The increase of market leaders' labor force in China was of 27.46% in 2010, and expected increase of 30% for 2011. They have increased salaries in 2010 by an average of 10.12%. The vast majority of them believe most human resource costs will increase by at least 5% in the coming 2 to 3 years. 9.63% of their colleagues left their companies during 2010. Employee retention was only a major issue for technical or specific knowledge workers. Large employee turnover rates are usual in China, and trying to discuss employee loyalty with a group of students led me to the conclusion that salary increases may be more important in China. They seem to believe that any other benefits and loyalty cannot overcome a potential increase in salary.
That's interesting. Now, an issue that's always in the news, it seems, is intellectual property. Is IP infringement a major problem for these market leaders? Do they think the Chinese government, for example, is doing enough to help them protect their intellectual property?
The vast majority of successful foreign companies in China, which is 78.5% of them, acknowledged the importance of protecting their intellectual property rights, and they answered this is an important or very important aspect of doing business. 89% of them own patents and trademarks. 50% felt the number of IPR infringements stayed the same during the last 3 years, and 47% of them believe that intellectual property protection from the government in China remained the same during the last 3 years. 78% of these companies have taken legal action against IPR infringements, and this is one of the most effective measures. The most effective measures these companies used to protect their IPR in China were pursuit of legal action against infringers, registering trademarks and patents, and human resource management action, which is legal terms in employment contracts, company regulations, and screening job applicants for honesty and intellectual property rights training.
So we've looked at the challenges they face, the reasons for their success in a broad sense. If you could leave me with one final takeaway, what do these market leaders among foreign executives who do business in China, what do they see as the most important factors for succeeding in the China market?
Developing a strong brand was the main factor. Also, quality and the price-quality ratio completes the top 3 factors of success of these companies' sales in China.
Robert, thanks so much for speaking with me today. Certainly you gave us a lot of valuable information there.
It was my pleasure, Jamie. Thank you.